Morning, Steve Free in Chicago with the morning grain comments. So it's Friday. Hope everybody has a safe and wonderful weekend. Next week, a shortened trading week because of the holidays. Overnight, we finally traded over $12 nearby beans, $400 meal, tested 40-cent oil, $4.30 nearby corn, and solidly over $6 Chicago March wheat. I think a lot of people are beginning to realize that South America crops may not be as good as maybe what the USDA is saying, and that we could get into kind of a La Nina type weather pattern in which southern Brazil and most of Argentina will be dry. Conditions down there, I think, are suggesting crops lower. There's talk about the total South American corn crop could be 560 million bushels below what the USDA is saying. And some of that lower supply could shift demand to U.S. corn exports. And if all that has to be shipped Jan through May, it's going to make our tight supply even tighter, and a carryout maybe as low as 1,300. And in the beans, people are talking about our crush record pace suggests USDA needs to raise their crush 50 million bushels. And if China does come in and buy a little bit more beans with almost 80% of the U.S. soybean export commitment on the books already with 8 months to go, they could probably raise exports 100 million bushels, which would bring our carryout down to 75. So I think we had some fundamentals versus chart formations. Breakout on the upside of the chart suggests now new money could come in. And we're going back to looking at some of these global stocks to usage ratio, both in corn and in beans, that suggest higher prices. The first objective for corn is $4.50. First objective for soybeans is $13. Plug in the fact that yesterday we had a private estimate of U.S. corn and bean 2020 acres that probably is too low. Prices may also need to rally to make sure that farmers in April here in the U.S. plant more acres than what the private guess is in order to satisfy demand, let alone increase the carryout to something more comfortable. We also note that in Russia, the customs agents are no longer offering documents for export. That suggests they want to try to keep the exports limited until the tax kicks in on February 15th. And if you add that tax to their price, they're out of the market after February 15th. So wheat buyers in the world are kind of limited to now where they can buy wheat from. And right now Europe is the cheapest. As far as the weather is concerned here, U.S. Southern Plains should remain dry. A 9-day outlook from NOAA suggests the southern third of the country will remain warm and dry. So that doesn't bring a lot of relief to our wet Southern Plains hardwood winter wheat crop. And finally, we're at 30-month lows in the dollar, 30-month highs in the euro, and that might help U.S. demand for exports. So again, we'll be watching the vaccine versus the virus to see if our economy slowly turns around in 2021. Watching any information coming out of a stimulus package in Washington and the transition to the new government. We'll be watching money flow, especially with the positive chart patterns in the grains. And obviously we'll be watching South American weather and then the transition to the Northern Hemisphere weather early in 2021. As always, these are my thoughts and not those of ADM Investor Services. Have a safe, profitable trading day. And remember, always treat people like you yourself would like to be treated.